Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty, and this is a daily candle chart of the Qs, which is basically the ETF that tracks the tech sector in the U.S. market. So, reviewing what we talked about last week, you'll see that I left my lines on the chart, and right here, this diagonal line was the forecast that I put out last Friday. And if you've been following along with the market guys, you'll know that the end of the line right there is my target. And that target number was 189.23. And if you look at the high from yesterday, right there, the high was 189.46. So we surpassed that target by just pennies. And then what happened? The market pulled back to fill this gap on the downside. So what does that mean for next week? Well, before we get into that, let me first explain to you what's happening with this U.S.-Chinese trade war that's going on. And obviously it's heated up. This morning at around 6:30 a.m. Eastern Time, I noticed that the Dow futures were up almost 100 points. And interestingly enough, an hour before the market opened at 8:30 Eastern Time, news broke of China increasing their tariffs to the tune of $75 billion, and the markets proceeded to drop right before the opening of the market. Now, let me explain something to you. 8:30 Eastern Time AM is equivalent to 8:30 PM in China. So what does that mean? Well, it's obvious to me that the Chinese are trying to manipulate the markets to the lower level because they know that a down market would hurt President Trump. And while that might be true, they're actually hurting themselves, because if we look at a weekly chart right here of the Qs, you'll see that overall we're still in an upward trend. And if you look at the US dollar, and I'll use ticker symbol UUP because this is the bullish fund ETF. Now this tracks the US dollar as it compares to a basket of other global currencies. And you can see that over time here, the US dollar has been gaining strength. So what that means is if you went on vacation spending US dollars in another country, your buying power has increased quite significantly. And so things are much cheaper when you go overseas to buy them, and that's actually helping the US consumer overall. The U.S. is the world's #1 consumer. In other words, we are the world's best customer. And if you could imagine trying to discourage your best customer from buying from you because you're punishing them, which is more or less what's happening in China right now, other countries are going to come after or pursue the U.S. consumer. So this trade war is not going to hurt countries like Korea or Singapore or even Mexico. It's going to help them. So be careful how you're influenced by the news as a U.S. investor. And I think overall what's going to happen is investors are going to wake up to the fact that this could only help U.S. companies as they cater to the world's best customer, the U.S. consumer. And in the end, companies will profit, especially after news broke today of President Trump more or less mandating, which he really can't do, mandating companies, trying to discourage them to move out of China. He really cannot mandate that. He says he can, but he can't. It's illegal to do that. But the markets are going to wake up. And again, if you look at the weekly chart of the Dow, and I'll move on to that right now, the Dow is showing a pullback. We have support here. We have support down at the very bottom here, right around 247. So I think that the Dow and the S&P, and I'll go back to the S&P to put my targets in there, but I think next week the Dow can actually drop to a lower level than we've seen in the recent weeks before we make an attempt to bounce off the support level down here. You see, so this negative news will most likely carry into Monday and Tuesday, and then I think we could have a recovery towards the end of the week. Let me put my lines on the chart for the Qs right here. Again, I think that we can continue lower, possibly dropping. I'm not going to say all the way down to 170 down here, but I do think that we're going to continue to drop Monday and Tuesday, and then possibly bounce just like that to recover back to the 20-period moving average. Because if the markets drop Monday and Tuesday, the price divergence from that moving average is going to be quite significant, so we'll have that rubber band effect taking place. All right, so that's the Qs forecast, that's the diamond forecast, and now look at the VIX. Last week I said the VIX would most likely move lower to test this role reversal support level. It did just that, and again, because the VIX is inversely related to the S&P, we saw a bounce right here. So next week I think the VIX will continue up just like that, possibly testing this high right here before making an attempt to pull back. So we'll have to see whether or not that happens. The stochastics oscillator and the CCI are both showing upward momentum, so that would support higher levels on the VIX, which again in turn is lower levels for the S&P. So looking at the S&P, again, I have the support level down here. I think it's going to hold. I think it will most likely drop to that point before bouncing. Again, I think it's going to be a mild bounce for the S&P. And that leaves us with the Russell 2000. If you look at the Russell 2000, this is the more broad-based index, and you can see that we closed below the support level. So this support level has now been broken, and what that means is that the market is now going to be seeking a new level of support. This is the first level of support that I can see for the Russell 2000. Do I think that's going to hold? No, I do not. In fact, I think it's going to drop, and then we'll have to see whether or not it's able to get back up over that, which would be over that newly established resistance level. So we have a role reversal possibility here where former support, or at least this is now current support, once broken, will then turn into resistance. So I promised you that we'd have a wild week this week. I'm going to make you another promise. I don't think the trade war is going to end next week. Okay, that's a promise. And as a result of that, we could see some more action in the news. The traders are actually loving this. The investors are more or less stressed out by it. I'm finding some great bargains in high dividend stocks. If you're interested in learning more about that, just go to our Market Guy website and you could subscribe to one of my trade alert services where I'm giving out trade alerts each and every week. And we're looking at some really good prospects. We're doing very well. We made a trade today in Boeing. The option traders took a short position, are already making money in that trade, and we continue to put out the trade alerts so it'll help everyone make better decisions and still focusing on the risk management component of our strategies, which is something you should absolutely be doing. So that's it. Have a great weekend, and we will talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.